The Capital Markets Authority rolled out a 10-year master plan meant to encourage the deepening of the capital markets. In their quest, however, CMA says it has encountered several challenges, such as the need for stronger market infrastructure, increased diversification of financial products and services to cater for the growing needs of investors and issuers, as well as the need to improve the level of awareness among potential and existing investors regionally and internationally.
There's more than one way to address liquidity. You can certainly address supply, and the authority is very actively working with industry in the context of the Capital Markets 10-year master plan to try and address some of the critical, supply side issues on how we can increase the amount of products coming to the market.
Muthura says improved liquidity or volume and pace of trading in capital markets is also vital to improving the attractiveness of the market through ensuring easier entry and exit. To this end, the Financial Service Volunteer Corps, the U.S. Securities and Exchange Commission and Bloomberg have partnered with Capital Markets Authority and other industry stakeholders to provide technical assistance that will help increase liquidity in the capital markets.
Tremendous to Kenya in terms of increasing the access to finance for the private sector, corporations of all sizes here. There can be a spillover effect throughout the countries of the East African community.
The partnership will also help address regulatory and market-based impediments to liquidity and advise on the development of new products and services to improve market access.
Improving the access to finance for smaller companies in Kenya to the capital markets is going to help this country tremendously, because it's SMEs that hold the greatest potential to create jobs. And if we can strengthen job creation here and elsewhere in Africa, that's going to promote economic growth.
Muthura says CMA is in the final stages of developing securities lending and borrowing regulations, adding that all stakeholders involved are putting the final touches on the relevant legislation, which will allow the introduction of securities lending and borrowing before the beginning of the next financial year.
Components related to tax as well as insolvency law. So it is really, once we can get all those three pieces appropriately adopted into law, then we'll be able to fully operationalize the product. We remain very positive that we've already had a number of meetings with the National Treasury Budget team, and they've, I think, recognized the opportunity that's presented by the introduction of this.
Caroline Jenga reporting for Business Insights.